Hello, everyone. This is Eddie Cannell with the Mortgage Brothers team. Today is Wednesday, August 4th, the middle of the week, and this is the interest rate update. If you are keeping tabs on interest rates for a home purchase or a refinance, this is a great channel to subscribe to. Click the notification button and the like button. Now, we're going to go over the interest rates real quick, and then I'm going to, as I usually do, go over the historical charts so you can kind of get perspective of where we are today versus the past. A quick disclaimer, I am not a financial advisor. I am a mortgage broker, and I am not advising you to lock an interest rate or not lock an interest rate right now. This is for informational purposes. And what we're going to do is we go over the 5 most popular programs that borrowers in the country are looking at. And that starts right with the 30-year fixed. We see those at 2.625. Today, based on these conventional loan scenarios, and here's a 15-year fixed conventional loan at 1.99, a 5-year fixed adjustable rate mortgage. This is also a conventional loan at 2.25, and then we see the 30-year fixed FHA loan at 2.25, and also the 30-year fixed VA loan at 2.25. The FHA loan scenario is here, and the VA loan scenario is here. Okay. Let's look at a 5-year historical, chart. Back in August 2016, interest rates. Let's just look at the blue line there. That's a 30-year fix. And that's of course the program that most people are really aware of, right? And I guess when people think about interest rates, they think about the 30-year fix for the most part. It was right about 3.5% back then. It climbed all the way up to about 5% in November 15th, 2018. So this is when we had the stock market was crashing, or at least really going into a bear market. It was about a 20% decline. That's when we saw rates hit that high, and then rates came down and have been coming down ever since. They hit a low around early January and popped up in about April, and then that's where they're at today. This is a really good 44-year chart. It just gives you perspective of where rates have been. I mean, people today, they're out there looking at rates, and they're, it's hard to remember. And, for a lot of people, that rates were high. They were in the early 80s, 1982, almost 18%. So for a lot of people who lived, and had those homes in the early 80s and were, those are old enough, right? I was not old enough. I did not purchase around here. But a lot of, I know a lot of people who did, a lot of people in the business who did, and they were doing loans at this time, and it was a very difficult time. But again, it's a long story, but basically how people were able to afford these homes. Home prices were lower, wages were higher, in comparison to home values. So very interesting. But what's important about this graph is that what you see is that there's a relationship between the interest rates and inflation. Inflation's the blue, and the 30-year fix is the red. And as inflation goes down, typically rates will go down. As inflation goes up, interest rates will go up. Now, that is generally the movement. They move together. But the next screen I'm going to show you, and you can kind of see that what was happening, that 30-year fix over the last 31 years has been stuck in a channel going up and down, up and down, up and down. It looks like it's just going up and down, but it's trending downward. And we're stuck in this channel. People ask all the time, how low can it get? It can still go lower, right? I mean, right now we're almost at 2.5%, the 2.625. Now the top of this channel is just probably around 4.5% or so. We could be in the 4s, no problem, and still be in this channel. But we could also, there's just not a lot more downside to the left, But anyway, want to give you perspective. We're continuing to go down. We'll probably continue to go down. We will probably eventually break out of this, but it could take something major to happen. I mean, fiscal policies, the way that the devaluation of our dollar, the printing, the debt, all these things come into play when you look at this. Okay, I hope everyone has a good rest of your day. Bye.